would you lend anybody $200,000 at 2% interest? You personally? Never in a million years.
Buy down is either the buyer or the seller paying
0.5% on the loan,
So-
on the interest rate.
correct 0.5%. Yep.
That's huge for
Yep.
1 point. I want to start by thanking everybody for coming. It's got a little bit of rain outside, but y'all came. But hopefully you get something out of this. And I want to introduce Melanie Edwards. She has been in the mortgage business for almost 30 years.
I've been in banking for
30.
And then,
Started off as a loan processor.
Let's start
did
with
construction lending.
Mm-hmm. Really into mortgages in 2007 when the market was
Perfect timing.
going down. So I can tell you, when everybody was getting out, I was like, sure.
I got my license in 2009, so we both got a fist bump for doing it at the
everybody
same
was like,
time.
you're crazy. I was like, you know.
Yeah, she is by far extremely qualified to talk about this. So,
Yeah.
and the topic today is going to be mortgage. Oh yeah, I'm sorry. Yeah, thank you, Lisa. I'm Ed Yannett. I've been doing real estate for about 35 years in one form or another. Been licensed for 15, but I had my contractor's license. I used to own a bunch of apartment buildings, managed and owned the apartment buildings, my own. Yeah, just been doing this forever. So,
Yep.
But we were joking before this that we both remember when interest rates were 15, 16%. So if some of you guys are new to having your license in 2000, when were rates?
That was like 80s and 90s, and then they were 12 in 2000.
No, but when were they super low? When did they start getting super low?
Let's see.
19, 18?
Yeah.
Is that right?
Yep.
I don't
Because
remember.
2000.
1918.
No, 2018, 2019. Yeah.
They were really low then.
I'm not that old. No. Yeah. Thank you. I look good for my age. Yeah. No, in 2018, 2019, but they were. I think personally they were artificially low. I mean, they were silly.
Yeah.
At 3.5% mortgages.
I locked somebody in at 1.99 in 2018.
Well, and Melanie, what I always say is like, would you lend anybody $200,000 at 2% interest? You personally? Never in a million years. There's no way. You know. So anyway, I think now we're more back to normal, but that doesn't solve all of, I think, our biggest problem, which is affordability.
Yeah.
You know?
Yep.
The making homes more affordable for people, because we're in a double whammy where prices have gone through the roof because of the low interest rates. But now that their prices are high, interest rates went up. Now the prices aren't going to come down because of, I can use a geeky econ word, price rigidity. But yeah, so we're just kind of stuck. And as real estate agents, this is a great tool. These mortgage rates buy downs we're going to talk about today. So, does anybody know anything about mortgage rate buy downs? Don't be shy. Raise your hand if you do. A little bit, just okay, all right. But I think that they're just a great, easy tool that you can use because we're in an environment where you might have listings or buyers looking at listings that they're going to lower the prices.
Yeah.
So not instead of, but in addition to lowering them, this is a great.
Yeah. Raise your hand if you have a listing over 30 days that's been sitting. Yeah.
Oh, sorry, I didn't raise my hand.
So that's what we're having a lot of conversations about, is getting in front of sellers to talk about what they can do to market their home and not necessarily drop their price down by $50,000, $100,000 and keep it and still make money, find the right buyer to purchase the property. So that's what we're going to be talking about today.
And I'm going to ask her questions. If you guys have questions, just jump in. All right, seriously. She has some really good information in front of you. We're not going to get into too many specifics, like, okay, if we have a $450,000 house with a 6.25% rate, the payment, we're not going to get into that, but that's something she can help you with. But just in general terms,
exactly.
I guess is a good way to put it, okay?
Yep.
So explain the different types of, well, first off, let's back up all the way.
Okay.
What's a rate buy down?
Buy down is either the buyer or the seller paying a fee to get the rate down. There's such a thing as a 3-2-1 buy down. There's such thing as a 2-1 buy down. There's such thing as a 1-1 buy down. Or you can do a permanent buy down, which is where the seller pays just a flat fee to get the buyer's rate down, to decrease. They're paying the closing cost, as you see, and the buyer can choose to use that. For example, $10,000 in closing costs to buy their rate down, or they can use it to pay for their closing costs, and they can pay to buy the rate down, or they can choose not to buy their rate down at all. They can just choose to use the $10,000 for to go with the closing costs. But the rate buy down is attractive right now because rates are still high 5s, low 6s, and people are holding out for the 4s and 3s, and maybe have a little bit of a payment shock. We are running into that lately, where people are like maybe have been renting their house or living in their house for 5 years and paying the 2%, and then they're going to a 6% interest rate where their payment's higher, their the values are higher, stuff like that. So that's one of the examples we'll talk about today. So the differences are temporary, which is the 3-2-1 buy down if you hear that verbiage, and then the permanent buy down is just a flat fee where the seller or the buyer pays to get their rate lowered.
What's a 3-2-1?
3-2-1. Okay, so perfect example of this. Let's say today's rates are 6.5%. So the seller pays a fee to get the buyer's rate down to 3.5% the first year, 4.5% the second year, 5.5% the third year, and then after the fourth year, it goes to that 6.5% for the rest of the term of the loan. So hopefully, in those 3 years, the borrower can refinance and rates will be in the 4s and 5s.
So
Yes.
on like a $500,000 house, how much is it going to cost?
For example, the seller was going to, and this is for a 700,000. This was, well, let's just say 700. So he was going to drop his price by 50,000. Well, ended up being he paid 25,000 to buy the buyer's closing. I mean, to buy the rate down so that customer could get 3.5% for the first year, something like that. So if you, I think I had this conversation with him. If you have a specific question, if you have a listing and you're like, it's sitting, it's not moving, email me and my card's in there, then the address, the amount that the person's got it listed for, and then how much they're thinking about dropping the price.
Okay.
And I can do an analysis to show you, but it's really beneficial for them to not drop that price and to and to advertise and to market paying a buy down.
What are you qualifying on the 6.5 at the end of the
Yes,
3-2-1, or do they get a qualifier?
No, they're qualifying on the 6.5% because eventually their rate's going to be 6.5%.
The temporary buy down is if they do refinance.
And they get that money. The buyer can get some of that money back. That's the cool thing about a buy down. So let's say, for instance, the seller has paid, making it $25,000 to buy the rate down. So the rate's 3.5, 4.5, and then at second year they refinance. There's money still left because that buy down, that $25,000 was to buy that rate down. It's kind of like a little savings account. They're holding it. We're holding it to make up for the rate as each year. Hope that makes sense. It's a little confusing, and so at the end of the second year, if they refinance, then they can that pocket of money that's left over for the third year can go back to them and make a principal
They get the
reduction.
cash back, which is great. Yeah, which is great.
And
Now,
go back as a principal reduction.
it doesn't do that with the permanent.
No,
rate
correct.
buy.
Permanent buy down is just you're spending 2 points, which is 2% of the loan amount, and that's an example, and then you're just getting at that rate of that day.
Now I have a question and a comment because there are a lot of nuances to this because, like you said, let's talk specifics. Well, does the person have a 640 credit or an 800 credit? Does the person going to put 40% down or 10% down? Is it FHA? Is it a VA? Because these are all things we'll kind of touch on. That's why she can't give you a specific answer. But it is a very, very good tool. But then to go back to your initial question about email you the amount they're thinking about.
Yep.
Well, what I would do is and you tell me if I'm right or wrong, but this is what I would do as a listing agent. I would say, hey, my client wants to lower their price by 50 grand. With that 50 grand, if we don't lower the price that much, what's the lowest you can get my rate?
Yeah.
Best case scenario,
Yep.
And if she can answer that question, great. But that would be what I would ask her.
Yeah.
Does that make sense? So then you have both. You can say, hey, Mr. Seller or Mr. Buyer, Miss Buyer, whatever. If you get a $25,000 seller credit, we can use 25 grand to buy the rate down. Your rate's going to be X.
Yeah.
Yeah.
So what we do is we have like a flyer, and we can co-brand it with y'all, and we put on there, and this is to present to your sellers, is to put the sales price of the house, what it would be to buy the rate down or do the buy down, because that's attractive to the seller is buy down. So we'd put it on there, and then what they would lower it if they want to lower it by 50,000. What it would be the buy down for the 25,000. It'll show how much cost would be to do that. So that's kind of a little tool. In your folder is also the big thing that with this is the seller concessions. There are seller concessions, so there are limits on what the seller can pay. So this,
Because there's two, if you want to, I heard an attorney explain it to me that when you're doing a HUD or an Alta, there's buckets of money. Like there's a bucket of money that the seller can use and a bucket of money the buyer can use. And that's regulated by
Freddie, Fannie,
three things,
FHA,
right?
VA.
Lenders.
Yep. It's regulated by Freddie and Fannie. They put limits, and then that goes, and then VA. Yep.
Program limits, government, federal law, lending law. That's that. I wrote it down.
Yeah.
I forgot I wrote it down there. So yeah.
I know, yeah.
Federal law, like Frank Dodd. Is it RESPA? One of the other ones
that's advertised.
So there's actually three different rules to this idea. There's the lenders. There's the program, the loan program, and then also the federal government that regulates the amount of money they can use.
The big difference is that you're qualifying them off the end rate.
Yeah.
We're back in 05, 04, we were giving them the arms, and that's what was causing all of this.
Yeah.
I have a question about the permanent rate buy down. If they do a permanent rate buy down, are they qualified on that?
They're qualified on that rate.
Okay, so that's different.
You're buying if they want to pay 2 points and get their rate down to 4.99, they're going to qualify on.
DR Horton's doing right now,
Yep.
$3.99. They're
Exactly.
taking it into the price to cover.
You got it.
Yeah.
That's exactly right.
But it's a permanent rate instead of the.
Correct. They're not doing buy down. We have seen some builders do some buy downs where they'll do the 3-2-1 buy down, and then we've seen the 2-1 buy downs. So the 2-1 buy downs are because they're not having to pay as much of a fee as the 2-1 buy down versus the 3-1. So there's a higher fee on that. So the thing with the concessions is the buyer and the seller. So the seller does have limits. They have the limits on the concessions. There's a certain percentage for just depending on what loan it is, how much the buyer's going to put down, different things like that. The buyer really has no limit except what he's talking about. Frank Dodd came in 2007, 8, and 9 and 10. The mortgage companies were charging the buyers ridiculous amount of fees to get a rate. I mean, they were. I mean, 5 points, 6 points. I mean, just paying a lot. So they said, no, we're not doing this. You can only charge. The rule of thumb is 3 points. So you can go in there and say, yeah, your seller's going to pay $50,000 of fees, but if that $50,000 of fee, so that's called high price mortgage lending rule, HPML, if you ever see that. But that is the cap of 3 points. Typically, it is a percentage, but that's what the buyer's max can pay to buy their rate down.
And just to be clear,
Yep.
does it matter who pays those 3 points? Like if the seller pays it, it's not the buyer's money.
Correct.
So does it matter?
No, it's the buyer. It's the buyer paying the 3 points.
So
Yeah.
can you layer them on top of each other? Like the buyer can pay
you can.
X and the seller can pay
Sure
X.
Can. Yep.
Okay.
The buyer just cannot. So if you have like if the seller wants to pay $10,000 in closing costs and the buyer wants to pay another 2 points to get their rate lowered, if they want to use that $10,000 to buy their rate down and they want to pay for the rest of the closing costs, that's fine. But there are limits on that, so you just got to make sure it meets that seller concessions.
Well, and I think this is just another tool in your toolbox that you can use when you're pre-qualifying somebody and you're like, let's go see a house. You're like, yeah, sure, great. Are you pre-qualified? This is a great segue into, hey, this is why you want to get pre-qualified, because you think you can afford a $500,000 house. You might be able to afford $550,000, right? I mean, because then all of a sudden, if your rate drops a half a point, their ratios to income, debt shift, and then all of a sudden they can afford, $25,000, $30,000, $100,000 more on a house.
Yeah, and we'll sit down with the customer and think. I mean, like if it's reasonable to pay out of their pocket to pay the $10,000 in closing costs, or maybe put $10,000 toward principal. I mean, toward the loan amount. I mean, we do that benefit too. So it's not. Sometimes it works out. The lower loan amounts, it sometimes is better just to use the money that they have and maybe get the seller to pay $10,000 in closing costs, and then they use their funds to buy the rate down or to put more money down.
Because this does affect how much money they can apply towards the closing costs, because this is the same bucket of money, right? So if you're going to use $25,000, the max, to buy the rate down, then you don't have any money left over for the closing costs, right?
Yeah,
Am I
correct.
saying that right?
Yeah, that's what. Yeah, but we work with them to see if they want to put all that toward the point,
Which
or if
one?
they want to. Yeah,
or a
which one they're gonna
combination
do.
of the.
Yep,
I got you.
correct.
Gotcha. I always thought 1 point was 1% of the loan value, which
1%.
equals 0.25% on the interest rate. And you said no, not necessarily.
Yes.
So tell me the scenario you did.
It can,
Yeah.
but not necessarily. So I priced one.
Well, hang on one second. Did you understand what I said? So if you pay 1 point, which is at 1% of the mortgage loan amount, 1% of the loan amount, you can lower the rate by 1/4 point. That was just something I always thought. For 30 years I thought that until you said that to me. You know,
I hear
was
that
like,
about every
you know?
3 months. Okay, well, they'll buy it down to like, 6. It'll be 6, and then they'll buy it down to 5.75. It really depends on product. It really depends on rate. Like VA, we ran one. It was for 1 point. It was 0.5% difference.
0.5% on the loan
So-
on the interest rate.
Correct, 0.5%. Yep.
That's huge for
Yep.
1 point, isn't
There's
it?
a-
I mean, I think that's 0.5%. It's a lot
well,
of money.
It was a $250,000 loan, and so for $2,500, he could pay to get his rate down 0.5%. And we also will sit down and go over with them like, look, this is going to take. You're going to pay the $2,500, but the difference between the 0.5% interest rate is going to take you 3 years to make up for that. Are you going to live in the house longer than 3 years? Oh yeah, I'm going to live in this house for 15. Then pay the fee. I mean, that's.
There you go.
We don't tell them that. But I mean, we just work the numbers and figure out how long they are going to recap the fee from the interest rate.
I think this is going to really separate your presentation, your toolbox compared to the average. I mean, I'm telling you, I don't know how many, because I'm heavily listing dominated, how many buyer's agents I talk to every day who I'm like, what do you know about rate buy downs? What? What are you talking about? And I have this exact conversation 3-4 times a week with buyer agents, so I think that's just something that, if you guys just had a little bit of this spiel that you can, impart on your buyers, I think it's going to help you out tremendously.
I
Working.
have a question. Does the seller feel like you're kind of pigeonholed to, you're as the agent or the seller have agreed to offer this? Do you have to then therefore do your mortgage through movement mortgage, or the
Well, we would love for you to do the mortgage.
You have to do it through movement mortgage. They're the only ones you can use. All right,
We would
that's just the
love
way
for
it
you
is. They're the only ones who have rate buy downs. I'm just kidding, compliance people.
Yes.
Yeah.
It's just a lot of mortgage lenders offer it. It's just something that has been because we're not busy. I mean, I'm not. I mean, this summer was great. It's like going like this. The buyers that we have right now, I think I was telling this. Buyers we have right now are just, they're trying to. I'm gonna wait. I'm gonna wait till January. I'm gonna wait until to see what the market's doing, and that's fine. I think it's just, and we are seeing a lot of. I mean, we drive around the neighborhoods. We see the open houses. There's a lot of open houses, a lot of inventory sitting. So it is having conversations. I think I was telling him that I rarely ever talk to sellers, but I've had conversations in the last 2 or 3 months with sellers, like just calling and saying, hey, it's a good entryway to figure out what they want to do because 6 months ago, 12 months ago, sellers weren't paying closing costs.
No, I was just going to say that.
They're just, we see the contracts. They're not. But I keep using 10,000 as closing costs because I've had that contract come in every once in a while with 10,000. Like somebody must have put out there, pay 10,000 in closing costs. Yeah, whatever did it. Yeah, I mean, like every contract I've had lately was 10,000 in closing costs.
But when you had, a couple, 2, 3, 4 years ago, when you put a sign in the yard and in 7 days you had 7 offers.
Yeah.
5 offers, no one was paying nothing. So again, there's a whole generation of real estate agents that don't even know you can ask for a home warranty. They're like, oh, you do that? I'm like, yeah. So we're definitely moving into a different market. And I'll tell you that the key to this is that right now we're in a sweet spot where prices haven't gone down a lot. Because when you start seeing prices go down, you're not going to be able to do this. Because when they lower the price, they're coming to the market.
Yeah.
So right now we're in a good spot. It's like, okay, that $600,000 house is still going to price for $600,000, but we're going to give them $20,000 for a rate buy down. So it's kind of I don't know if that makes sense, but it's a unique situation we're in because there are more rate cuts now listing, price cuts.
I was about to say
than
rate
ever
cuts.
before.
Oh goodness, yeah.
Yeah, than ever before.
I'm
so
hoping there's rates cut though.
no, not rate. Yeah, I'm sorry. We're talking about rates. No. Okay. Well, that brings up my other
Yeah,
point.
that's a good.
That brings up my other point, and I think we had a discussion about this. Was that I think a permanent rate buy down is the best way to go because I don't see rates going down much.
Yeah.
The inflation numbers just came out. Inflation went right back up. If inflation stays here, the Fed's going to stay here, then rates are going to stay here. So I don't think they're going to go down. Much, personally.
Yeah, and I'm sure y'all have heard the mortgage companies have built in already the drop from before. We did have a drop. They were in like 6s and 7s, and now we're in high 5s, low 6s, middle 6s, and VA rates are great right now. They're in the 5s. Everybody I'm locking VA is in the 5s. Everybody's happy about that. And then
Wait, they're in the 5s now, just without
the high 5s, I should say. I'm sorry, not
No,
5s.
that's
High
great.
5s. Yeah, they are.
Okay.
And FHA is still there's low 6s, conventionals low 7s. I mean they're better than they were. I was like, I remember somebody they were at like 8 and I was like, no, I'm going to give them 7.99. I was like, I'm not giving anybody
Exactly,
8%. Like, I will take a hit, but I'm like, no, I'll do 7.99. But they're still good. It's just I think that I think if people are uncertain, what we're getting a lot of feedback is people are uncertain of what the market's doing, uncertain of what, jobs. I mean, that's the most things I hear is I'm going to wait and see. We do hear I'm going to wait and see what rates are going to do.
But see, with this, you can be proactive and actually make the rate go down now.
Yeah, correct.
With this, what we're talking about.
Used to when we had lower, I would just price a rate just par, which is like no points, no anything. Everybody I quote now is with 1 point, and there's no, the cost estimates we get from other lenders are all 1 point, 2 points. We built in the fee to get that rate lowered. And just to give you a little plug for movement, because I got to do, because you can go anywhere, but refinances, we do hold our mortgages, so you can do a refinance in-house. So when rates do go down, we'll all be busy doing refinances. And we are.
Wait, what does that mean? That you do? I understand in-house, but
we don't have to charge intangible tax again. We don't have to do any of that. It just moves over.
How much
to
does
our,
that save in fees?
depending on what the loan amount is. It's on a $300,000 loan, it can be $600. It can be, there's different attorney fees, and we don't charge any of that. The only thing they pay for is like attorney fees and update title, and everything moves over.
That's easy. And it's easy too. That's
Yeah, real easy. Yeah. We just
Well, and I think too, because that's the affordability thing. And one of the things I'm real big on is I'm dealing with the next generation of home buyers, talking to them, and I'm trying to convince them that listen, the average rent right now in Savannah is 2 bedrooms, $2,300, $2,200 on average. You can buy a $250,000 house. Mm-hmm. And if you did any sort of rate buy down, like you just said, on a $300,000 house, and you just say that 300, the VA was,
and rate buy downs you can
extraordinary.
do conventional, FHA, and VA. So those are the rate buy downs.
Yeah. But that's a big difference, because if your principal interest is $1,800 with everything all in, it's going to be $2,300. And if you can drop that principal and interest down by a couple $100, that makes all of a sudden now I can afford a house.
It makes a difference.
Right? Did I say that right?
Mm-hmm. It makes a difference if you can go from that 1% to 2%. Yeah.
So.
And then there in your folder there is some examples of an example of a buy down. This is just a generic one, but this kind of shows you I'm not going to go into the numbers, but that just kind of shows you an example of the buy down we do. The permanent buy down is, I feel like everybody's doing that lately. The seller paying closing costs, the buyer's putting some money down toward the points. But yeah, at 1 point is 1% of the loan amount. Some people think it's the purchase price, but it's the loan amount.
Okay.
Yeah.
Anybody have any questions? How's lunch?
It's great.
Is it good?
Is it good? Awesome.
Good.
Awesome. Any questions?
Is she going to go over the rental income, the DSCR?
Yeah, I can. Oh, yeah. So I put that in there because we are having I call it creative financing lately. We're doing a lot of creative financing.
Well, explain what
DSCR is debt service cover ratio. And what that does is if you have an investor that is looking to purchase a property and maybe they have over the Fannie limits, they've got weird tax returns, they're self-employed, they're something that we can use the rental income on the house per the appraiser. So if the appraiser puts on there $3,000 is the rent and your mortgage payment is $2,500, we don't need to collect anything, any financials, anything like that, except for their name, credit report, and move on and close on it. So we use the rental income that the appraiser puts on the appraisal, and then the payment. And as long as that is not over 1 point, which means one, we do have programs that'll go below, but I always say 1:1 is, then we can do it, then move it forward.
Explain the ratio 1, you lost me.
So if you have a $2,800 pay income on it,
Okay, the rent
let's
on
say
it.
3,000,
Okay.
3,000 on there, 3,000 times, there's a percentage that we use. We have to cut that. So 2,500. Let's just say the customer's going to get $2,500 after a vacancy rate, and your payment's $2,500, and that is 1 ratio, 1/1.
I got it.
Yes.
Okay.
Yeah.
But
Anything over, like if you get $4,000 a month rent and your payment's $2,500, that's
so obviously you want the higher ratio. Yeah, I got
Yeah, you want a
gotcha.
higher
Okay.
rent
Got
for
it,
the
got it.
payment.
Okay.
I just did one on Tybee. It was a Tybee condo. So this is kind of cool. We use I think it's Air DNA for Airbnb reports. Is that it? Yeah. So we can, because the appraiser came in low, because they were using, permit, I mean, they're using long-term rental income. So we were able to pull the Air DNA report and use that for income versus what the appraiser put on there, and then the customer qualified.
Okay.
That's a huge difference.
Yeah.
Yep.
It's got to be
It's
2 or
good.
3 times the difference, wouldn't you
Yeah,
guess?
because
In DNA, it's like $69 a year or something. It's not here.
if you ever need one, just email me. We paid for it, so we can just send you the report.
There you go.
Now, don't send me 200 of them, unless we're all going to do the financing on them.
Yeah, exactly. Yeah.
Then I'll do, but it is, that's a very helpful tool. And especially if you have a customer that is looking at a property on Tybee and they don't have that Air DNA report, or if they don't have a, like VR, I had one that the customer was they were using it as a second home. So we pulled it on some, or the agent did, I didn't do this, but I helped her. We pulled some of the units around that unit and pulled it for them and showed them what they were making it. Yeah.
That's
so,
awesome.
So DSR, that's a great one for that. I did a quadplex. That's a great one because quadplex. I mean, that was any of those are great because they have a lot of income and they're.
And that's any number of units?
Well, quadplex go up to 4.
Oh, the DSCRs go up to 4?
Mm-hmm.
Okay,
4 units.
I didn't know that.
Yep,
Okay.
4 units.
Okay.
That's a great part. We also have bank statement loans for any self-employed borrowers. We look at 12 months of bank statements. We use a certain percentage of their deposits as income. For self-employed borrowers that show no income on their tax returns, we can use bank statements and not even look at tax returns. Yeah, I mean, we even have no debt income loans. I mean, nothing loans, but they're going to come with a hefty interest rate. But yeah, if somebody wants a house, they can.
Do you have a program that helps buyers if they don't have any money for closing at all?
Yes.
Is there a second mortgage?
Yep, we do. It's called Boost. It goes along with FHA. It covers, FHA is 96.5% would be your first. Second would be 3.5% or 5%. So the 3.5% would cover your down payment, and then the seller pays the closing cost. I had a buyer a couple weeks ago, brought $300 to the closing and used that because the seller paid the closing cost. They used 96.5%. They used 3.5% of the second. We also have a 5% second they can do as well, and that covers 3.5% for the down payment and then 1.5% to go to closing cost.
Wow.
Yep, and it is a first and a second. The rate is on the first is just FHA rate, and then the second is going to be 2% higher than. So if your rate's 6% with FHA, your rate's going to be 8% on the second.
And is it due at the same time as the other one?
It's figured out as it's a payment of 10 years on the second. Yep. But that's been very popular. We've done a lot of those, and then of course we still do Georgia Dream, Dream Maker. The Ports has one. They're all through the county and city. St.
What's wrong with
Joseph's.
the ports? I've heard of the
Yeah,
healthcare first.
the ports
first
give
responders, but I've
the
never heard
ports
of the
give an
ports.
amount depending on how long you've been there.
Oh.
They give a grant. They give you a grant.
That's interesting. Never knew that.
Yep. There's they have to qualify. I'll tell you, the income limits are what kills.
Yeah.
Yeah, they some of the people don't qualify because of income limits. The income
Because they make
limits
too
they have
much
not
money.
raised.
They haven't raised the income limits.
They have not raised the income limits, which I'm hoping they will do soon because that's why we've been so busy doing the boost loan because it's been a lot of people don't fit into the mold of the Georgia Dream income limits. Yeah.
What are the dream?
So Georgia Dream is anywhere in Georgia, and then Dream Maker is City of Savannah, and then in that Dream Maker is Port. I'm trying to remember the third one. Ports Authority.
The first
City of Savannah.
The first responders is the one I'm familiar with. I've done a couple teachers.
City of Savannah, and then what is it? St. Joseph's. I'm trying to think of that. Yeah, I'm trying to think of the third one. There's 3 of them, but I'll remember later on this afternoon. As I'm doing something else, I'm like, oh yeah, that's the third one.
Well, but I think you're pointing out that there's so many different options that when you qualify a buyer, keep some of this in mind because you're never going to remember all this stuff. I mean, I know what you're talking about. I don't remember it, so.
Yeah.
But I always text her, hey, what's this?
Yeah.
Here's what I got. What can you do? And she'll throw 5 or 6 scenarios back.
Yeah.
I mean,
good,
maybe it's
yeah.
not 5 or 6, but it'll be 2 or 3.
Yeah.
That'll be very good options to present back to your buyer. Again, it's just helping everybody with the affordability. I mean, that's what it comes back to.
Yeah.
I mean, you look at how much a mortgage payment is on houses. I mean, it freaks me out. I'm like, oh my gosh, that's how much that mortgage payment is, But if you can bring them some relief, and it's no sweat off anybody's nose because you can lower the price anyway, in most cases, and then use some of that money to buy the breakdown, and everybody's happy, So.
Yeah.
Yep. So.
Definitely.
Anybody else? We good?
Yeah.
You got anything else?
But I was just gonna say, my card is in there. If you have any listings that have been sitting, just email me. Email me the address and then what we can look it up on the MLS. But what the seller is thinking about dropping it to, and then I'll show you the difference of them paying a fee versus dropping it. It's something to present to them and see if they're interested. They still get the higher sales price, but they. Maybe just have to pay some money for closing. Right?
Yeah, that's awesome.
Yeah.
What do you
Thank you.
recommend, like, a seller or the agent for the seller? Like, how do you get that information in front of a buyer or whatever? Like,
In front of the buyer. I mean, you can do like the one we did was for an open house, and I gave it to the seller, and then the seller we put the flyer, because the flyers pretty much just has the thing. You can leave it at open houses. You can leave it at but it is something. I think y'all were talking about that earlier, and I'm gonna let you stay. I'm gonna stay out of that lane because I know y'all have a lot of rules too, like we do. But what you can put in the listing, like maybe I don't know, and maybe you can.
We're pretty wide open.
Yeah.
I mean, we can't fib, but
Yeah.
we can put whatever we want in there as long as it's backed up. We can't put commission in there, obviously,
But maybe seller offers buy down rate option.
Well, and
I don't
I
know,
would-
something like that.
personally, what I would do is put something on your Facebook. Make a little sliding Canva saying, hey, talk to me about making rates, in the 4s again, No. No, but that's what I would do. I would just put something simple on your Facebook page, on Instagram, So
Yeah.
that would be my suggestion. An actionable thing you can do.
Yeah. Yep.
So anyway,
Yeah. Yeah.
no, that was awesome.
Thank
you very
y'all
much.
very much. Thank
Yeah.
you. Yes.
Yeah.
Yeah. Let me know if y'all need anything.
Yay! Thanks, Melanie.